If you constantly feel like you're getting chopped up or stopped out right before the market moves in your direction, it's not bad luck, it's because you are trading inside the internal range without knowing where the external target is. What's up guys, this is Big Bull here. Today I'm going to teach you the mechanical framework of how price actually moves. It's not random, it's an algorithm. Price moves from internal liquidity to external liquidity and back again. That is the cycle. If you understand this one concept, you stop guessing, you stop forcing trades in the chop, and you start knowing exactly where the market is drawn to the next. I'm going to show you exactly how this all works, and I use it to snipe the open and done by 10 a.m. Let's deep dive into the charts. This one, I was actually looking forward to go long today above this swing highs. But when I saw the close, it rejected that 1 hour bearish pocket right here. Rejected this 1 hour bearish pocket and closed below this range again. That was a clear sign to me that now this is rejected this bearish pocket. So the bears were strong enough in this zone that we got that rejection. And now this swing lows, there's the previous day's lows, is where the most of the liquidity is. And price is definitely going to go here before reversing to the upside again. So that was my bias going into today, and I told you guys about it a day before. And fast forward today, and how I got my entry. This is a range that price formed. See, this is a swing highs price formed, and this is a swing lows that price formed, highs and the lows. So anything, so this becomes our external range liquidities, and any swing highs or any swing lows in between that range is our internal range liquidity. So whenever you're dealing with internal range liquidities or prices in a range, the price, that means this becomes the protected high, this becomes the protected low. And we're going to look for entries. We're only going to look for entries when price sweeps that internal range liquidities either to the downside or to the upside. So that was the plan. So price swept that internal range right here on 5 minute, closed below. So the setup was already confirmed, the sweep one. So this morning I was just waiting for price to get into the high value zone and get into a trade. So let's pull out our fibs. And if you see, that's a clear, that was a swing lows. Price broke below it. That's a clear sign that is a directional shift in the market. And when price broke below this swing lows, the range that we were watching this morning, directional shift, clear lower lows and lower highs. As soon as we got that confirmation, so it was pretty clear to me now the protected highs for intraday is this high value zone. And now risk is pretty much based nothing on the short. And we're targeting, the first is this internal range liquidity was my first target. And this was external range, which was our ultimate target. And price just flushed towards it in like 5 or 10 minutes after being in this consolidation for almost half an hour or an hour. So that was the game plan of me getting into spy play and executing live in front of you today. So this is basically the same setup that we play every single day. Gives you really nice risk to reward on your trades most of the time. You see, if we look at it, the stop on this trade was, let's go back into the 1 minute time frame, is one thing quickly you need to understand is whenever price goes down, it's on 1 minute or 5 minute. Whenever you see this highs here, this is all the base that price is forming. That means it's a accumulation zone before price makes a new swing lows. That means on every single level, there are sellers sitting with their open sell orders. And if price pulls back to this zone anytime, they want to short it and they will short it. So as price was going down today on 1 minute, I saw these liquidity pockets formed where a lot of open sell orders are sitting right here and right here. Right, you see. So even if you're looking pretty clean 1 minute, but even if we go in a smaller time frame, there is consolidation, right? So that's just how the price moves. And once we break that range to the downside right here, should be on high volume too. A bit of high volume on this breakdown. And now that I know that it is breaking down and I look at the cues, that thing is already looking dead to me. See this massive range breakdown, also form this bearish pocket on 1 minute. You see on cues, go back to SPY. And so now we know if price stays below this zone, that means active intraday sellers are sitting in this zone. Price staying below this zone, very high chances that we're gonna see a continuation in the trend. If these sellers gave up, let's say candles closing back above, that's gonna be an instant bear trap, and price is gonna move back up to this swing highs. So the risk was if the next candle closing back above this 678.41 level. So that's the swing highs that price made before going to the downside, lower high. So that lower high was my stop loss on this trade. Candle closed below, like you guys, that very tight stops, and we're targeting this lows here, this lows, and this yesterday lows, and it played out to the dot. You see, on 1 minute, what price did now form this bearish pocket on 1 minute. What is that? Accumulation. A lot of sellers with open sell orders. What's going to happen? Price is going to pull back to the zone, and they're going to reject it and dump it again to the downside. So let's play it, and boom, another lows, another lows, another lows. You see that wicking of that when the price swept the internal range liquidity. That was bull's trying of the internal range liquidity to reverse. Wicked it, but no follow through after that. There is no change in structure. There's no higher highs or higher lows. Price didn't even break this swing highs of this prior candles. That means the sellers are still in control. There's no reason for us to sell the full size yet. Play, play, play. Boom, another rejection to the downside. So now the price formed this another bearish pocket here on 1 minute. You see, very clear base formed. Price made a new swing lows. Price traveled back to this liquidity pocket and rejected back to this new intraday lows. So now what that we already got our big move to the downside. Price is back in this 1 minute liquidity pocket right here. So if bears are protecting the price below this 675.70 level, we should see another lows here, right? Because this is a liquidity pocket that sellers with open sell orders sitting here, and they were strong enough to make new swing lows on the day. And now price is going there. They're getting it cheap with the very tight stops and a very high reward here. The same setup that we got here. Our risk was almost 50 cents, and we got 4.5 points on the SPY. So that's 1:10 risk to reward ratio on SPY. So even if you look at any futures traders out there, they target 1:1, 1:2, and 1:3 is like you see when barely anyone doing it. And then we get 1:5, 1:10 on daily basis just because we have this model where we watch the internal range liquidity sweeps, external range liquidity sweeps, and then go into smaller time frame. I wait for price to break below that prior swing highs or lows, and then price to form lower highs and lower lows, and then get into a trade with a very low risk and obviously high reward. You see how it's working out again. Price went to the liquidity pocket and rejecting again. The risk was again nothing. 40 cents risk, and it's already down 1.2. So 1:3 we already achieved on this trade already. So that is how you interpret the price, and just look at the market in general, because that is how the price moves. Doesn't matter the time frame, 1, 5, 10, 15, hourly, monthly, does not matter. And does not matter the commodity you're trading. It's just going to be the same thing in every single time frame and every single commodity. So that is the cycle, external to internal. and internal to external. Next time you sit down at your trading desk, ask yourself, are you seeking that high or low as your next targets, or where you're gonna take your entry? If you cannot answer that one question, you shouldn't be clicking the button at all. Trading is simple, but it's not easy until you learn to ignore the noise and focus on the liquidity. If you want to see me apply this logic live every single morning, I call out these setups live, the targets, and the execution in real time inside my community. Click the first link in the description to join the free Discord and claim your free 7-day trial and come live trade with me every single day.